My name is Ikra Harrison, and I'm a senior business consultant at Protelo Inc. Today, we're going to walk through how cost projections and WIP reporting actually work together in Acumatica, where teams tend to get stuck, and how to choose the right approach for your close process. I'll be using a real project sample and demoing each concept as we go, so let's go ahead and jump right in. Here's the path we're going to follow today. We'll start by understanding the financial status of our sample project. I'll walk you through the two cost projection methods that Acumatica has, review the new WIP adjustment feature, then wrap it up where teams typically get stuck and some best practices. So let's go ahead and start with the project we'll be using today. So I'm going to go ahead and start by navigating to the project that we're going to use so we can kind of ground in everything and see where the project stands before we do any cost projections. To keep things simple, this project, we are only going to be using one task. This task is tied to a single lump sum project. You can see that the total contract amount is $40,000 and we've billed $20,000. So from a billing perspective, we're 50% complete. Now I'm going to move over to the cost budget, where you can see that how the costs are actually tracking. Here, that same task is broken out by account group: labor, material, and other expenses, each with its cost posted accordingly. You'll also see some performance percentages. This is where the system calculated based on how much of the budget has been consumed. If I group by task, Acumatica rolls all that up for me. This shows a system calculated percent complete of 64.13%. At this point, we billed 50%, but based on the costs incurred, the system considers us 64% complete. That gap tells us that the project is already underbilled by roughly around $5,600. There's nothing like magical happening here. This is simply just how the system calculates percent complete based on actual cost. So let's confirm that on the project WIP report. And toggle over here. I'm going to limit this. I'm going to limit the parameters so we're only looking at the one project and not getting lost in the noise. Typos. And then I'm going to just make sure that it's running by cost budget. I'll zoom in a little bit here because it's a little hard to see. So on this report, contract amounts come from the revenue budget, estimated costs come from the cost budget, and then the project cost to complete is currently driven by the budget, and then your actual and costs and billings are pulled from the release transactions. Let's scroll over a little bit more. Everything here is based on data that's already been posted in the system. And you can see it, the project is showing underbilled by $5,651. This result is coming directly from the system's WIP logic based on the current project data. So now that we understand the project's current financial position, let's step back into the deck and talk about how the cost projections come into play, and then what changes depending on the method that you use. So now that we understand where the project stands today, we can talk about cost projections. In Acumatica, there are two ways to project costs, and they're typically used by different members within the organization. So when I think about cost projection by revision, I think operational forecasting. This is typically owned by project managers and operations, the people closest to the job. It's updated whenever new information comes in from the field. Sometimes that's monthly, sometimes that's more often, and it may not be tied to accounting timing. The real question this method answers is, given what we know today, where do we believe this project actually is? When a project manager updates a cost projection by revision, the system recalculates projected cost to complete and percent complete, that updated forecast can feed into the project WIP report we were just looking at. What's important to understand is what this doesn't do. This method does not create a financial or GL impact. It's just designed to keep the forecast honest, not to perform accounting recognitions. And a lot of teams, this is exactly where things start to feel misaligned, because operations feels aligned, but then accounting still hasn't adjusted anything yet. So let's pop back over to Acumatica to look at the cost projections by revisions. So I have a cost projection that I've already prepared here. that I wanted to go through. So I've navigated here, and from a project manager's perspective, this is where they've reviewed what's happening in the field and updated their projected cost to complete. For demo purposes, the important thing isn't really necessarily the individual lines, but it's what happens when this revision becomes the new forecast. So before I release this, just want to make sure that, I want to be clear about what this method does. So this releasing this cost projection by revision updates how WIP is going to be calculated, but it does not create that GL transaction. So I'm going to go ahead and release. And then now let's move back over to that project WIP report. I'm going to go ahead and put that parameter back in. And then another parameter that I wanted to touch base on is I want to change the planned cost estimation from cost budget, which is what we ran previously, to by cost projection. And then what this is going to do is it's going to tell the WIP report to use the updated cost projection, not the original budget. So I'm going to go ahead and run this. Zoom back in. So I'm going to scroll back over to our projected cost to complete and our percentage complete. So based off that cost projection, now our percent complete has been updated to 71%, which in turn has also updated the earned revenue as well as the cost in excess of billing. And then for some organizations, this method alone is enough. In this case, I would say the key is consistency. You would regularly want to update cost projections, run your WIP report based on these projections, and then use the output of the basis of this WIP report as the basis of your WIP adjustment that you're going to do on the journal entry screen. Again, this would still be a manual step, and not something that the system posts automatically. Other organizations may prefer the system to post the adjustment directly, which is where the second method comes in. Let's move back to the slides and talk about the cost projection by date. Now we're shifting from like an operations view to an accounting view. So cost projections by date is typically used for accounting to calculate project margins and analyze over/under billings for a specific date range. Unlike the revision method, this isn't about continuously refining the forecast. It's about capturing where the project stands as of a specific date. The question this method answers is, as of this period, what should I recognize? These types of projections are typically run at month end as part of the close process. In practice, that's usually once cost for that period are in and the project manager has finalized the latest forecast, whether that's on the last day or during the first few days of close. Prior to 25R2, this still create a GL impact. This would serve as the basis of the manual WIP adjustment. All right, so let's dive back in and go talk about cost projections by date. So I'm going to go ahead and navigate over to the cost projections by date. And I have one prepared already. So this projection is tied to a specific financial period and again, used typically part of the month-end close, not necessarily the day-to-day project management. And so since I've already prepared this, we're going to just focus on like the system behavior, not necessarily the data entry. And so in this case, the project manager has provided updated information indicating that this project is about 75% complete as of this period. Based on that input, the system's going to recalculate the projected cost at completion and projected profitability. Currently, at this point, this still is just a forecast. Nothing has posted yet. So I'm going to go ahead and release this projection so we can see what the basis of what that WIP adjustment would look like. Perfect. So releasing this projection does not create any accounting entries. It just simply locks this forecast in as the source of truth for the adjustment that we'll soon calculate. Now I'm going to move back to that project WIP again. Go ahead and specify my project parameter. And then again, I'm going to be running this by cost projections. So now I'll go ahead and run this report. Zoom back in. And then kind of taking a look at some of the columns that we've been previously touched on is our percent complete has now updated to 75.98%, also updating our earned revenue and updating our cost in excess of billing. So essentially, this is what you would use as your over under journal entry that many organizations use, where it's not project specific. It's just an entry that you're using to adjust your sales that are showing on your financial statements. All right. So with that said, let's move back to the deck to talk about the new Project WIP feature. So
Hey,
everything, yeah.
sorry, can I ask a question here? Someone's asking if this is the only for the construction edition for Acumatica.
Yes, it is. And actually that was coming up right here. So it is for
Okay.
the WIP adjustment is for the construction. I will double check if the cost projections are just by construction. I know it's in the help topic. I just don't know off the top of my head, but I do know the WIP adjustment is only available for the construction.
Thank you.
Yep. All right. So everything we've looked at so far has focused on forecasting and reporting. Project WIP adjustment is a step that formally translates that projection into financials. So this feature is available in 25R2, uses the latest release cost projection by date to calculate whether this project is over or under billed for the period. Based on that calculation, the system creates the GL transaction for you. And because this is part of month-end close, it also supports auto-reversing entries in the next period, which when I did that manually, errors happen. So having it systematically driven makes it a lot easier. So also, instead of recreating this logic outside the system, the accounting can rely on the same projection data the project team is already using. So let's take a look at what setup is needed to be in place, and then we'll dive back into Acumatica one last time. So since this is a brand new feature in 25R2, I want to just take a minute to level set what needs to be in place. I'm not going to necessarily walk through the configuration that is documented in the release notes, but I do want to kind of explain some of the guardrails. First, this feature is available with the construction feature enabled. That's because it's designed to solve construction-specific accounting problems, timing gaps between revenue and costs. Second, your project accounting structure, things like your default accounts and your different posting levels for WIP need to already exist. These decisions most construction companies already have, but now there's a formal place for you to specify that information. Lastly, finally, the process relies on date-sensitive cost projections that have been released. These projections become the source of truth for that adjustment. Once these pieces are in place, the WIP adjustment becomes a clean, repeatable month-end step instead of a manual journal entry workaround. And then one more tip, you also want to make sure that period that you're going to be doing your reversing entry in is also open so that you can make sure that reversing entry posts with no errors. All right, so let's go ahead and navigate over back to Acumatica one last time to talk about the WIP adjustment. So as I said, up until this point, everything we've looked at has been about forecasting and how we expect that project to land. This last step is about actually the recognition aspect of it, how that forecast is reflected in the financials. And this is where this new project WIP adjustment comes in. For demo purposes, I'm just going to show the one project, but in a real close, this is almost never a one-to-one exercise. Typically, accounting is reviewing multiple projects at once, all driven by the latest release cost projection by date. And so that cost projection by date that we recently released is listed right here. So I'm going to go ahead and select that, which is going to go ahead and bring in the underbilled amounts. So as of right now, nothing has posted yet. We are still reviewing in review mode. You can see it's still on hold. In practice, this is where, put it in the bounce open status, this is where the accounting would typically review the adjustment, validate the amounts, confirm the periods, make sure it's aligned with expectations. And so before I release, I just want to make sure you guys all know that releasing this WIP adjustment does create a financial transaction. This is the point where the system will take the adjustment needed to align revenue and cost for that period. And again, not relying on a manual journal entry. So I'm going to go ahead and click release. Okay. Now that it's been released, that adjustment and the associated auto reversing entry has been posted. Behind the scenes, Acumatica created that appropriate GL impact, but I'm not necessarily going to drill into the journal entry today. So really the key takeaway here is that the step eliminates the need for that manual journal entry. You can see based off the settings that are set up in the system, what the overbilling accounts are, what the underbilling accounts are, and what your revenue is. And then also the posting levels that you want this, how it's going to go back to the projects. The release notes are really thorough, but if you have any questions, please add them to the chat or post them on the community, and happy to take a look. All right, so with that said, let's jump back into the deck where teams typically get stuck, because that's where I see most issues most often. So when teams struggle with WIP and Acumatica, it's usually because the inputs and expectations aren't necessarily aligned. If projections aren't updated regularly, WIP always feels wrong, no matter which method you use. If costs aren't grouped in a way that reflect how work actually happens, projections technically work, but the story doesn't necessarily line up. Percent complete also often starts from the input from the field or the project managers, and that input is important. But when it's moved into Acumatica, percent complete isn't just a manual estimate, it's ultimately expressed as the calculated result based off those actual costs and projections. And then I also often see teams try to fix project issues directly in the GL. This usually creates short-term relief and long-term confusion. And then project managers, with the month-end timing issues, project managers update progress when they get information, and accounting needs a snapshot at the period end. And if these timelines aren't coordinated, WIP will always feel off. And then just some best practices. Teams that are successful with WIP tend to be very intentional about how they use projections and adjustments. At minimum, projections should be updated monthly. If projections lag behind reality, WIP will always be reacting instead of reflecting. Project managers need to understand, project managers don't need to understand accounting, but they do need to understand how their inputs affect projections. Clear ownership here makes everything downstream easier. And then when it's time to correct WIP, use the project WIP adjustment in 25R2 instead of those manual journal entries. This keeps the correction tied to the project and preserves also your audit trail. And then be intentional about how and where your WIP post. These decisions should support how you review projects and close your books, not just kind of going off the default settings. And then before running WIP, I would say always take a moment to review those project variances, because this small step can lead to big impacts. What I've seen is that when WIP tends to work best when teams are consistent and about how they're going to use these tools. So those are the workflows I wanted to cover today. I'll pause here for some questions and hand it back to Chris.
Okay, we do have quite a few questions here. So
oh, yay.
Let me get started
here. I'm going to pull it up.
Okay, so from Mason, how do you handle differing labor rates for the revenue budget and cost budgets? Our company has been trying to hide burdened labor rates from project managers. Is your revenue budget for labor and cost budget for labor the same, or do you have the actual labor burden budget so that the percent calculation for progress is accurate? Should we be using quantity instead of amount on the progress billing basis?
I'm going to have to read that question.
I know.
Where
it's 11
is
minutes ago. It's down a little bit. It's from Mason.
Okay. Mason, why am I not seeing that? Okay. All right, there it is. How do you handle different labor rates on revenue and cost budgets? So when you're looking at the WIP report, it is typically, at least the WIP report that I showed today, it is total cost. And so I may want to drill into this a little bit more, but it's going to be based off your estimated, which shouldn't have your actual labor rates. But you can also, I would say, reduced access. I'd probably have to look into this a little more. Do you mind posting this on the community portal and we can take a look and I can, spend some time and answer this for you? All right.
Okay,
So there
let's
are.
move on to Carol Lee. Does the date or projection date drive the financial period relation? If those dates are mid-month, like your example, are the details to
Mhm.
date as of 12/15 or still the end of the financial period?
Yeah, so that's a good question. So it would take the latest cost projection date. So, typically that cost projection by date should be run with the 12/31. Just for the demo purposes, I ended up using just the date that I was creating these sample transactions, but it's going to use that latest released cost projection. So if you did one after the fact, it will update with those that latest revision.
Okay. Next one is from Tina. What might cause projected costs at the completion to come in lower than revised estimated costs on the WIP report?
The one thing that I've seen when I was a project accountant is sometimes the field staff is actually ahead of schedule. So I was in wall protection, and what they previously did is like kind of estimated it based off like how many walls are completed or whatever, and based off the number of hours. And so if they had completed more walls based off the estimated hours, that would put them ahead of schedule, which would in turn lower those projected costs because we wouldn't necessarily need those. So that was kind of the example there.
Gotcha. Okay, the next one is from Don. I'm unclear about how the WIP reports decide between the two types of cost projections, i.e. IRL. How do the two types of projections interact? Also, it was referenced that the by date in the 25R2 post. Is this via the WIP adjustment or another method?
So IRL is in real life, Chris.
Right. Sorry, I knew that.
No, it's so the WIP adjustment only works based off my testing. I also have a question out with Acumatica, but based off the testing that I've done with 25R2, the WIP adjustment only works with the cost projection by date. The WIP report will update by just whatever latest revision it is, but that doesn't create the GL impact, just the cost projection by date. And then the WIP
Okay.
adjustment is only available in 25R2, but both cost projection by date and projection by revision are still available in prior versions.
Okay. The next one is from Bobby. What if my WIP entry needs to hit 4 different revenue GL accounts?
That would be another good question for the community. I would just need to kind of dive into the release notes a little bit more. I know currently that based off what the release notes say, it's a default one revenue account. But again, that might be a good thing to put on the community because I have met with other organizations that have multiple revenue GL accounts. So.
Okay. Next one is from Julie. Can you take a projection by revision and convert it to a projection by date to be used in month end for accounting?
So, Julie, I really like the way you think because when I was testing this out, that's kind of where my mind was going. It's like, okay, if the last projection, can we use this as a basis of like, the cost projection of date? In theory, I think you could leverage using business events and kind of create some sort of workflow that would work. It wouldn't automatically necessarily like you do the cost projection by revision, it creates one by date. That's not systematically there, but I like the way you think. That's something that I was kind of thinking through when I was working on this presentation, where it's like it would be really nice to have like a certain date that this runs by. That you know, if it's all good, you press a button and it creates that final revision amounts that the project manager submitted and now does the one that we need for accounting. So I like that one.
Okay, next one from Carly. What can management edit on the adjustment screen before release? If they make edits, does it change the previous cost projection?
So you can I will double check. It's typically just the projected cost to complete. You can't change any lines with what the actual cost or the original budget. Some of those lines are just there for informational purposes, but if you drill into those screens, I think there's on the cost projection by date, there's only a handful of columns that you can actually like enter into and adjust, but it will affect it, right? So it won't keep that history. So if you were to put it back on hold before it's released, make changes, and then release it as well, or put it, back in the open status, that's not going to preserve that history that you had there. So I
Okay.
definitely think there's a gap.
Okay, next one from Melody. What if your cost bucket for materials is 100,000 and you end up finding cost savings? It will only be 75,000 actual total. How do you avoid the overbilling calculation?
I'm trying to go back to I think they haven't updated. What was that one?
As Melody, what if your cost bucket for material is 100,000 and you end up finding cost savings and it will only be 75,000 actual total? How do you avoid the overbilling calculation?
So using the cost projection to update your projection to what your actual costs are going to look like, and then running your WIP report by cost projections, that'll help with that overbilling calculation. Alternately, you can also do a change order to reduce your cost from 100,000 to 75. And so if you weren't necessarily using cost projections, just using the normal standard cost budget, you could, do that. But I feel like that's a little bit more manual entry. So I would definitely just, update that cost projection to say, we're not going to have $100,000 cost. We're going to have 75,000, and you can run the WIP report, and those will be used in the calculations that WIP report produces.
Okay. Next one from Charles. Good info on WIP adjustment tool. Had some issues with cost projections flowing into WIP properly in older versions. Can you show best practices slide one more time, or will the slide deck be shared? And we will be sharing the presentation with the recording, Charles. And the recording will
put
be
it on the
posted in the
screen.
community library, which I just put in the chat again.
And I'll send the deck over to Chris so that you can
Yep.
you can share that. Did you say that?
Yep. Yeah. Yeah. So, and Jeff asked the same question. So Jeff, yeah, it will be recorded, put in the community library. Let's see. Sherry, if we're using Procore to currently forecast at the project level, will we have the ability to map those transactions to the Acumatica project projection fields? Or how would you handle this to utilize Acumatica as a source of truth? Do the PMs need access to their projections in Acumatica?
So this would be another good question for the community. Just would take a little bit more time for me to fully answer. Short answer is the PM would need access to do projections in Acumatica, so they would need access there. I just would have to kind of investigate, the compatibility with Procore and what that looks like.
Okay. Michelle asking about a recording. Yes, Michelle, it'll be up on the site. Let's see. Nina, yep, up on the site. Adam, if a project has already revenued and you have WIP on a project that never released, how can you manually release this? Currently, we reverse the allocation, but that would then cause that expense to reallocate and therefore go back into WIP. Is there a way to release manually that does not involve reversing the allocation?
Adam, could you also post this one on the community portal? I would have to kind of just ask you a few more questions just to kind of understand this fully. So don't want to necessarily answer that incorrectly, but definitely post that on the community and I'll take a look, and you can tag me too.
Okay. From Jeremy, how does the WIP adjustment logic handle projected losses on a particular contract? Does it recognize the full loss in the period? A loss is projected as per Canadian GAAP?
Yeah.
Yeah. Okay.
Post that, Jeremy, if you could post that one too. I know the release notes mentioned obviously GAAP compliance. I just don't know if that was US GAAP compliance or Canadian GAAP compliance. So I can double check and answer on the community portal, or I'm sure some, others can too.
Okay. Chat is turned off. Yes, that's because we can't bounce back and forth between chat and Q&A. It gets too confusing. Justin, does the WIP report in 25R2 show a time-sensitive contract amount for calculating earned revenue? The WIP report in 25R1 shows the contract amount in real time, which can skew the earned revenue if there is a sizable change order that is approved in the following month.
I didn't see anything in the release notes with how it's gonna change that calculation, so I can't imagine. But I would put that in the community just that way, it gets visibility. Let's Acumatica know some of the hurdles that we have, and they do listen and read the community often and take what we put out there as
Yep.
feedback and modifications. So.
Okay, next one from Elizabeth. Is the cost projection only a forecast of the total project cost? Can we forecast the cost and revenue by percent complete by financial period?
Yeah, so I believe that would be the cost projection by date, and then one of the fields that you can edit is the projected percent complete, and you can use a percentage instead of a dollar value, which will also work with it'll update all the calculations and on the back end.
Okay. Janella, I have a unique use case. Client cost budget and revenue budgets are the same, and they base the WIP earned revenue based on the cost projection and revenue. Will this still work?
I would put that one on the community portal. I have a general idea of what type of client this is, but I would definitely need to test through it.
Okay, well, if that's all the questions, thank you so much, Ikra. That was great. Thank you for presenting today. Thank you everyone for attending today. So with that, I'm going to let everybody go and say thank you again and have a great rest of your day.
I appreciate it. Thank you.